Okay, all right. Thanks, everyone. My name is Kristin Chen, and I represent AI Research Lab from a company called Blank 360. I'm presenting this research paper called Integrate Large Language Model in Financial Investments and Market Analysis. Sorry. There you go. All right. So in today's presentation, I will start to talk about why this service matters by giving you guys a little bit overview about my company called Brain 360. And then I will be introduced the team who has been putting this paper together. Following, I will be define the scope of the research problem by identify the key challenge in financial decision making. Following to identify 4 emerging solution patterns that we observe across in the literature reviews. And then I will do the solution mapping across in all the papers that we actually consolidate in this surveys by just give you guys an overview of what's going on in the paper. Closing the presentation, I will share a little bit about reflection, conclusions, and future research. Okay, so why this service matters? A little bit about my company. We call Blank 360. Our headquarters is in Columbia, Maryland, United States. And we also call ourselves Blend. Even though we're located in Maryland, but we are a global company now. We're reaching to 1,200 employees. We have building our capabilities around everything for the eras of AI. So you see in the bottom of the slide, we offer capabilities around AI consultancy, data science, data engineer, and intelligent application. So we offer our solution to a bunch of very well-known household named clients in the market. So you see a bunch of logo in these slides. And just to pinpoint, we are specialized in different industry and domain. So you see a list that also in listing in the bottom of the slide. Financial service is some of the targets industry that we wanted to offer our specialties. And so the motivation is pretty natural here. We wanted to know what exactly happened in this field and how AI is shaping the solutions for offering the solution to this field. Okay, so this is the team that actually put the service paper together. We have Sedigheh, myself, Pradeep, Lina, and Upmanyu here. Yeah, just want to call out that this is the full team's work. So right now, let's move to framing the actual research problem that we're tackling here. We're not just training LLM to chat. We're basically deployed in a high-state, fast-paced environment, imaginable financial market. And this presents a 5 interconnecting challenge. First of all, financial market is incredibly dynamic. We need every single price moving can impact by events such as earning release, policy switched, or even just a news or a tweet. So we need some model that can operate with speed and context in a real-time adaptation. Also, we're talking about more data, financial data are deeply multimodal. So making a robust investment recommendation, we need some reasoning through like text model data, numerical data, and visual data. We're talking about 10K, 10Q filing, earning costs, stock price movements, and a bunch of like dynamic graph. So we need something able to synthesize all the insight together and provide a reasoning decision. We are also talking about a market that transparency is non-negotiable. Investor and regulator needs to understand what's going on inside the model. And we cannot operate in a market, a model that is black box. So LLM is able, we need something that able to explain what's going on behind the scene. Also, we are trying to identify that there's a language gap here, right? It's not like a generic language that all the LLM models speak. We need something that able to trainable and speak the language of finance to meet the domain expertise and expectation. And lastly, we're observing a limitation of traditional quant model. Quant model is excellence in mathematical computation, but a lack of narrative context and forward-looking insight. We're looking something that able to bridging the gap. LLM seems a perfect solution here, but it adds prompt sensitivity and mathematical precise limitations and computation costs. So we need to have something to able to solve this challenge. So all to say that this market is extremely challenging, and we wanted to see how the research up there are able to tackle this challenge. And this slide presenting 5 identified emerging solution pattern that we observe across in all the research that we put in the service paper. The first thing is LLM central reasoning. We are not this model is, we're trying to have the model perform not just like basic Q&A, we need them to be performed as a contextual financial analyst. Techniques such as trend of thought prompting, in context learning, fine-tuning, and instruct tuning, it's empower the model to deliver explainable, fluent response to a critical financial question. And then we're observing another important movement that a lot of application not relies on singular model. It's moving to deploy this to an agentic architecture, which is pretty much simulate the real world investment team. We have agent identified as a fund manager, risk manager, analyst, and different levels of expertise here. Those agents collaborate, call external tools, reflect their own mistakes, and then improve their decision along the way. So that's why the agentic architecture looked very promising in solving the problem here. Hybrid integration is something that we also observe a very powerful system design across in the literature. Basically, we're trying to combine the contextual intelligence from LLM with classical tools such as quant models, sentiment analysis, reinforcement learning, and machine learning model, all together trying to maximize the strengths of all the different dynamics of the model to enable this workflow. And lastly, we see a very high emphasizing of simulations and benchmarking-driven validation. We don't just, a lot of research don't just predict the price correctly, but this system is undergo a stress test of portfolio bet tests and Sharpe ratios and even behavioral realism experiment. Basically try to say that the researcher doesn't satisfy with contextual accuracy, but also, able to deploy this in a realistic, robust environment. So now I'm going to do a deep dive to each single solution. The first is LLM functionality. The immediate advantage of LLM bring on the table is interpretability through text generation. LLM provide natural language rationale for buy, sell, hold decision. This enable transparency and regulatory readiness. So in this setting, in this technique, nothing is black box. Everything is explainable. To complete more complicated tasks, researchers apply like a trend of thought techniques or in context learning. Trend of thought technique, prompting technique enable model to perform step-by-step financial logical reasoning, and in context learning basically allow a generic LLM to perform and behave like a financial analyst without retraining the entire model. And the third thing that we observe from the LLM functionality application in this field is domain adaptation. Researchers heavily apply fine-tuning and instruct tuning. Fine-tuning allow model to speak financial jargon, language, performed based on financial logic and text format. In short, tuning ensure the model following structured tasks, just like a junior analyst. All together, LLM capability basically provide a cognitive core functions of this modern AI financial model, making everything not just predictable, but explainable, reasonable, and understandable. Now we move to the second solution pattern, agentic architecture. So basically, we're observing this technique that actually try to simulate a real world investment team operation. Generally, most of the research present horizontal or vertical interactions or collaboration among multi-agents. Horizontally, some agents act like peers, or vertically, we're observing leader and analyst dynamics, and the agent perform like an analyst, portfolio manager, fund manager, or risk manager, all together operate in a system. And there are several key patterns that we observe here. First, role identification. Again, as I say, most of the agent giving a specific role just to mimicking a real trading desk. Also, agentic system is generally able to self-correct or reflection. And that means that the agent that in the research usually involved through human feedback, reinforcement learning, or self-correction, updating their beliefs and improving their own performance, which is actually super critical because adaptivity is another thing that we're looking for financial decision making to adapt to the ever-changing market. And the third thing is skill training. So basically it means that agentic model train multi-specialist agent actions into a coherent workflow, which generally enable more complicated tasks like multi-hop reasoning and sequential decision making. Some research we observe that even not fully adopt like fully agent system, we also adopt this modular workflow. A modular workflow support plug and play, like experimental and also scalability. Agent themselves dynamically involve external tools such as rack system, API, and database. Altogether, it's the power of LLM itself, but also functional in a multi-agent framework that able to expand the capabilities to make a more critical decision together in financial operation. The third thing we observe is this hybrid integration, which is another very powerful system design that actually, in this case, LLM is not like operate isolating, but also sort of power and work together with quant model. And the motivation is pretty obvious here. LLM is interpretation and context, but struggle with precision and consistency. You can see the advantage from the previous two solution pattern I shared, right? LLM just capable of doing that, but because it's non-deterministic, so sometimes it struggle consistency, and we also know that LLM is not super good at doing mathematical reasoning in general. Quant models are regulars, but lack of adaptivity and explainability. That's why researchers put these two things together to maximizing the strength. The table that I show in this slide basically showcase several integration type that we observe from literature review. I'm not going to go through the detail, but basically you can see they lay out a lot of different things together. LLM for middle step, and then optimization layer as an execution layer. We also see LLM partner with semantic filtering and new summarizing to perform the portfolio prediction. We have LLM also integrate with multi-model module that are able to interpret technical graph and technical diagram, and also modular pipelines with LLM components. So basically try to say these patterns of solution maximizing both families of model strengths and then try to combine them together to solve the problem. And the last thing is simulation and benchmarking. So to closing out the review of the solution, we see a lot of like heavy research around how to evaluate this model, right? So the first thing is backtesting and portfolio metrics. The AI-driven model in this field, in this case, usually evaluate with like real financial metrics such as Sharpe ratio, cumulative returns and drawdown to assess the portfolio performance. But the research do not really stop by numbers. A lot of simulation actually has been conducted in evaluate the performance. Simulation, including like simulating the earning events or trading dates, modeling like bear and bull cycles, even just run simulation to simulate investor sentiment spread through like social media. Like people talk about gossip around or discussing different stocks in social media to see how the model react to those sentiment spread. The third method here is comparable benchmark. This model often to evaluate against strong basic line model like Feinberg, GPT-4, GPT-RL, reinforcement learning and classical machine learning. And last, we see some advanced study to even try to simulating irrational behavior to assess model rationale reasoning. So all this just to emphasizing that we don't want the research do not want this model to be theoretically accurate, but also robust enough to make decisions in live market situation. Okay, so this session, we're kind of laying a huge master table here, but basically we have solution mapping across in all the study that we put in the service paper. And the table basically reads as in you see the research work in the first column and the application of the paper and what specific technique actually map to each single solution pattern. So for the first paper at the first row, basically saying market strength AI framework is present in this paper for stock selections and portfolio manager. And this framework specifically using trend of thought prompting in context learning and expert prompting, and all this LLM also modularizing into different agent framework. So we see this paper talk about news summarizer. We have agent deal with dynamic data and microeconomy data in different agents in the system. And this work, I believe, is benchmarking to SP100 over 15 years return, and then achieving, assessing their performance by accumulating returns and alpha tests. So I'm not going to go through the table, but basically we have laying out all the paper that we're including in this survey and what exactly the technique mapping to each solution. So to closing out the presentation, I'm going to share the conclusion and future outlook. Basically, here is trying to say financial decision making remain complicated because the market volatility and dynamic switch. The data that using this market is multi-model, and also the need for transparency and domain-specific reasoning. And the research that we observe have 4 emerging solution patterns: LLM agentic system, hybrid integrations, and evaluation and benchmarking. So to look forward, we believe the future lies in continually adaptive, modular, and explainable financial AI. This system will either be partnered with a human analyst or even operate fully autonomy themselves. but the design needs to be always monitored and under real market constraints. But the future is unstoppable for this field. So this is the reference of the paper and my contact information. Feel free to contact me offline if you want to give a deep dive or like discussion about the paper. And with that being said, I'm open to Q&A.